Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 16, 2023. Asian equities are poised for a climb following a rally in U.S. stocks linked to artificial intelligence, while expectations of additional stimulus in China have led to gains in commodities. The S&P 500 continued its winning streak for a sixth day, marking its longest run since November 2021. This positive momentum from Wall Street is expected to provide impetus for Asian benchmarks. Futures for Hong Kong and Australia have already shown gains, while those for Japan remain relatively unchanged after a strong rally earlier this week. However, caution prevails ahead of the Bank of Japan meeting scheduled for later today. The US dollar slumped, while the Bloomberg Commodity Index had its largest advance since November. The widening exuberance surrounding artificial intelligence is driving the US stock rally beyond the tech industry, raising concerns about an overbought market. Investors are betting that the Federal Reserve will end its tightening cycle sooner rather than later to prevent a recession, further boosting equity markets. The S&P 500 surpassed 4,400, reaching its highest level since March 2022, while the Nasdaq 100 reached its highest point in nearly a year and a half. In the bond market, there was an increase as the yield on 10-year Treasuries declined by 7 basis points to 3.72%. Australian notes followed a similar trend in early Friday trading. The key yield curve between 3 and 10-year Australian bonds remained inverted, reflecting traders' concerns about potential economic downturn due to anticipated rate hikes. The US dollar slumped the most since February, while the euro rallied after the European Central Bank raised interest rates by another quarter point. President Christine Lagarde described a further hike in July as very likely. This move came a day after the Federal Reserve paused its series of interest rate hikes. However, the Fed projects that borrowing costs will go higher than previously expected due to persistent inflation and labor market strength. The Fed is currently in a data-dependent mode before potentially delivering one final increase in U.S. borrowing costs next month. The yen pared some losses after touching its weakest level against the dollar since November. Traders are now looking ahead to the Bank of Japan policy meeting, where it is expected that the central bank will maintain its negative rate policy and yield curve control program. On Wall Street, a significant event is expected as a massive amount of options contracts tied to stocks and indexes are set to expire. This event, known as OpEx, typically leads to portfolio adjustments, increased trading volume, and sudden price swings. Bitcoin's share of the total cryptocurrency market value is at its highest level in about 20 months, indicating a cautious sentiment among investors towards digital assets. In conclusion, Asian equities are poised to climb following the U.S. rally, driven by stocks linked to artificial intelligence. Expectations for more stimulus in China have also contributed to gains in commodities. However, caution remains ahead of the Bank of Japan meeting. The market will also face a significant test with the expiration of options contracts tied to stocks and indexes. Bitcoin's share of the crypto market has reached a 20-month high, reflecting cautious sentiment in the digital asset space. European Central Bank raises rates amidst economic concerns. The European Central Bank, ECB, made a bold move by increasing interest rates by 25 basis points to 3.5%, reaching the highest level in 22 years. The ECB emphasized that it has no intention of pausing, despite concerns about the impact on the economy. In fact, the ECB also raised inflation expectations and lowered economic growth estimates for the current year and the following year, signaling that more challenges lie ahead. While U.S. markets rallied following the Federal Reserve's decision to pause rate hikes, European markets reacted differently to the ECB's rate hike. Traders in Europe were not pleased, leading to a 0.13% drop in the Pan-European Stoxx 600 index. This divergence in market sentiment reflects the different reactions to central bank actions in different regions. In other news, BlackRock, a prominent asset management firm, plans to launch a Bitcoin exchange-traded fund, ETF, according to filings with the U.S. Securities and Exchange Commission, SEC. However, the timing is uncertain due to ongoing lawsuits by the SEC against Coinbase and Binance, two major crypto exchanges. The lawsuits revolve around the classification of cryptocurrency tokens as unregistered securities, with Bitcoin being an exception. Microsoft experienced a significant boost as its shares surged 3.2% to reach an all-time high of $348.10. Microsoft's technology chief, Kevin Scott, predicts that artificial intelligence will contribute $10 billion to the company's annual revenue. This projection has attracted investor interest, as they recognize the potential growth opportunities presented by AI. Before we continue with our analysis, we'd like to remind you of your support for our channel market briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Despite the Federal Reserve's indication of future rate increases and a prolonged period of high rates, the stock market shrugged off the news. CNBC's Bob Pisani highlights two potential explanations for this response: either the Fed's guidance on rates is misleading or the economic data suggesting a recession is inaccurate. In summary, the market's disregard for the Fed's actions is evident as the S&P 500 reached new highs, defying expectations. Other major indexes, including the Dow Jones Industrial Average and the Nasdaq Composite, also experienced significant gains. June, historically a challenging month for stocks, has defied expectations, with the Dow up 4.4% and the S&P up 5.5% so far. The tech sector continues to be a driving force behind the market rally, with companies like Microsoft, Oracle, and Alibaba posting notable gains. The market's resilience and seemingly irrational behavior in the face of economic challenges is a reminder of the unpredictable nature of financial markets. Key events this week: Bank of Japan rate decision, Friday. U.S. University of Michigan consumer sentiment, Friday. PIMCO's Clarida, Fed had awkward but hawkish pause. Play 2:52. Watch, Federal Reserve may hike just once more after awkward pause, former Vice President Richard Clarida said. Source, Bloomberg. Some of the main moves in markets. Stocks. S&P 500 futures fell 0.1% as of 8:13 a.m. in Tokyo. The S&P 500 rose 1.2%. Nasdaq 100 futures fell 0.1%. The Nasdaq 100 rose 1.2%. Hang Seng futures rose 0.7%. S&P/ASX 200 futures rose 0.4%. Nikkei 225 futures were little changed. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0948. The Japanese yen was little changed at 140.17 per dollar. The offshore yuan was little changed at 7.1215 per dollar. Cryptocurrencies. Bitcoin rose 0.1% to $25,580.76. Ether fell 0.3% to $1,663.54. Bonds. The yield on 10-year treasuries declined 7 basis points to 3.72%. Australia's 10-year yield declined 4 basis points to 3.96%. Commodities. West Texas Intermediate crude was little changed. Spot gold was little changed. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.